Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 29th of November. Now, after the selling rout that we had on Friday, markets have been spending the weekend trying to evaluate exactly what is the impact that's going to happen from the Omicron variant of COVID. How markets are going to assess this is going to take several days, I think. Still, the dust is yet to settle. It's a sharp sell-off on Friday. There's a degree of unwinding that move on Monday morning. However, you've seen bond yields moving higher. You've seen the dollar regaining a little bit of its lost ground, but equally equities are higher. Oil prices also higher as well. But the question is how far those moves go before they start to encounter resistance again, and how markets respond to that as well will be important. We're still yet to really get the impact on monetary policy decisions as well. Governments around the world are trying to increase restrictions and social mobility again. However, what do central banks do to their monetary policy, potential tightening that they've been doing, and will that be put on hold? That will certainly have an impact across markets. So today we've got a speech by Jerome Powell. It's not an important one necessarily, but it could be. It will be Powell's first chance to respond to this Omicron variant of COVID. So in terms of the markets we're looking out for today, we're looking at cable, which rallied to an extent on Friday and is holding that ground, but just maybe now starting to drift lower again. Does that mean that rallies are a chance to sell still? Also looking at the oil price. How does oil react? There's a move by OPEC to delay some meetings this week. So how does the price react to all that? And also looking at the DAX. German equities are higher this morning, but can that move run through resistance now? So let's have a look. And onto the Infinox MT5 platform, starting off with sterling dollar. We can see that sterling dollars just in the last couple of days really tried to engage in a bit of recovery. Obviously, Friday's trading was pretty hectic and the dollar was suffering amidst the falling bond yields. But certainly we've seen that move is starting to stabilize to an extent. We've seen as the European session has come in a degree of selling pressure, but that seems to have found a few buyers in the last few minutes. This is the 1 hour chart here. So looking on the 4 hour chart, you can see there's an extent of a base pattern, you could argue, a little head and shoulders reversal potentially there. And that's something that I'm going to be looking out for. You've got the reaction high that we had on Friday around 133.60 area. That's your resistance line. And if it moves above that, that starts to then encounter a little bit of a recovery phase, I think. I've drawn in this downtrend now. It's not perfect. It's only got 2 points of contact, but there is certainly still the run of lower highs in place. But that downtrend is a reasonable gauge, and it encounters also the resistance around about that 34 big figure area, 34.10. So again, that would be the resistance to look at in a recovery scenario. But at the moment, it's just hovering around. It's interesting that the dollar has had that big run of strength, but just starting to sort of ease a little bit. And it'll be interesting to see in the next couple of days how the US dollar trades respond to bond yields as well. So the oil price had that sharp move lower on Friday. Wow, it was 12% down on the day on Brent Crude. There's a degree of rebound on that RSI, oversold around that 30 mark. And how the OPEC meeting and OPEC generally responds to obviously Omicron, but also the US releasing reserves into the market is going to be important this week. And at the moment, technical resistance is not a great deal of technical resistance until you get to 77.80 area. So that's initially really where you're looking out for here. On the 4 hour chart, you can see that was really a basis that the market reacted to on Friday on a little rebound to there and then just sold off again. And that is obviously now going to be the first line of real resistance you're going to be looking out for. 76.90, you could argue, is a touch of resistance there, but 77.80 really is where that starts to come in on a near-term basis. So there is room for an unwind, but again, how does the market respond today? Is it just a rebound that fizzles out and just rolls over is the question. Obviously, we've got that rebound in place at the moment, but again, you'd be looking initially supportive around 74.30 area. If that breaks to the downside, you could see that drifting lower again. Finally, onto the DAX. Well, another market that's been selling sharply down in the last few sessions, but obviously a big culmination sell-off on Friday. Again, is that a culmination sell-off, which then means the market then starts to react higher? Well, it's already starting to look at that resistance around 15,500 to 15,600. How the market reacts around there will be interesting, because obviously on this daily chart, that is the first line of resistance that comes in. And you've got these other bands of resistance overhead that you need to look at, but initially obviously 15.5 to 15.6. How the market reacts around there will be important. We've got initially the market just consolidating to an extent in the last few hours, and again 15.5 to 15.6 is important, but obviously that reaction low of where we've seen today, 15.325, is that initial line of support. Thanks for watching. I hope you found that informative for your trading. Join me again on Wednesday, where we'll be looking at a whole raft of data, including the ISM numbers, and also starting to look ahead to that payrolls report. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.